Hey everybody, Boris speaking at Forex. Welcome to the commodity dollars for July 8th to July 12th, 2019 for Aussie dollar, dollar CAD, and Kiwi dollar. And the story in the COM dollar trade was initial strength start of the week, but then we had a massive fade today, with the exception of CAD. And the reason being, of course, is that U.S. yields really popped up. And of course, the COM dollar trade is very much a yield trade as we go forward. At this point, the kind of yield situation in the NTPDNs has sort of settled. We have the Aussie RBA essentially on hold for the time being. The RBNZ didn't even lower rates at this particular meeting. What's interesting is that the one big event we have this week is going to be the BOC, which in many ways is sort of the most hawkish central bank. It's not expected to lower rates. That's going to make it very net positive to the U.S. rates if the Fed cuts, and explains one of the reasons why the CAD continues to outperform and actually could be an outperformance candidate going into next week. So we're going to take a look at that on the crosses side. As far as the calendar goes, not much except for the BOC on the COM dollar calendar. We literally I'm looking here, we literally don't even have anything aside from the BOC and the business manufacturing PMI at the end of the week. So it's really going to be centered on the BOC trade on what I think it's Wednesday. Is it Wednesday? Yeah, it's Wednesday. It's usually always Wednesday. There is a presser, so this is going to be an important one. Definitely worth watching. Also, actually, what's interesting is that right after that, we're going to get the FOMC meeting minutes later in the afternoon. So it'll be an interesting contrast, although nobody really going to pay any attention to that because everybody's going to be looking forward to the FOMC meeting at the end of July. But again, sort of the stance of the BOC as a relatively steady stalwart who doesn't necessarily want to cut rates now. And more importantly, if they don't necessarily communicate any willingness to cut rates at the next meeting, that will suggest, I think, a natural strength to the CAD because we're talking about 175 on the CAD versus 125 potentially on the US. It's a 50 basis point spread. Should really firm up. When you look at the Canadian data, Forex Live actually had a great column about this last week. They talked about the fact that the index of economic surprises is actually near all-time highs in Canada. That doesn't mean that the economy is at all-time highs. It just means that the positive surprises have been surprising substantially and consistently to the upside. That's bullish, and that should be bullish CAD as we go forward. So let's take a look at the charts here and just see how everything sets up. So here's the Canadian dollar. We'll start with the sort of strongest, the first. And today's action, this is Friday afternoon, very, very bullish, big reversal. A bullish Canadian dollar, obviously negative dollar CAD here. We are stretched away from the moving average, but when you get to these kind of levels, and the fact that we haven't been able to retrace towards the levels, I thought we were going to, bounce up higher. We did get long dollar CAD early in the week, and I worked modestly because we came up to about 31.50, but that was about it. But the point being is that when you get these kind of strong trend moves, the possibility of a sharp break to the downside is actually stronger. So we're going to be watching this 30.50, 30.100 level. That's really the critical level. That's the 500 SMA. That's the big round number. All of that really going to come to a head off the BOC meeting. If the BOC kind of suggests, yeah, we're not going to do anything as far as rates go, that could provide the kind of fundamental catalyst for us to break these key levels, and that certainly provides further scope to the downside. Or at very minimum, really creates that whole big downward momentum where the trend really stays in place here in a very, very sharp zone. Aussie dollar, on the other hand, ran out of gas just as we had expected. We said that 70.50 was going to be a very, very chunky area for Aussie. That was going to be very hard to overcome, and it really was. But we have basically come down now to the SMA. And really, honestly, it becomes a dollar trade at this point. It really because this is the only thing you really want to watch when it comes to Australia is the U.S. 10-year yield. Because in order for Australia to really get corrected further down to the 69s, we need the 10-year yield to come up around 215 to 220. That would suggest sort of that the whole U.S. yield complex and the curve inversion has gotten way overdone. With Aussie now down to 1, that provides very much scope to create further dollar strength and push this mainly back up down to a test of these 69, maybe even 68.50s. if we go right back below 2, and this is 2 is sort of like the big equilibrium level. If we're back below 2 next week, Aussie goes right back towards the highs. So it really right now, for now, 69.50, 70.50 trade, and very much driven by where the U.S. yields are, as that's the only determinant as far as the market goes. Kiwi, sort of same kind of a thing. We came off the very, very strong breakout of 67s. We made fresh highs and then kind of died here. It came back down. But now, when you're looking at this from a longer point of view, we're essentially trying to make higher lows. So it's still net positive. It's still probably more intelligent to buy the dip than try to sell the lows here, because really a truly negative, you could try to trade this whole 66 to 65 double test possibility. But the much more likely scenario, if the U.S. yields really don't run away from us, is that we probably come down to below 66 and then consolidate and bounce back up. As I said, at this point, it really becomes a referendum on where the U.S. yields are going to go. And given the fact that we got lots of sort of mediocre CPI data next week, it's hard to imagine U.S. yields really starting to do a massive short cover unless we get a whole bunch of Fed rhetoric that says we're really concerned about not lowering rates much further than what the market thinks. If the Fed rhetoric gets a lot more hawkish, then certainly the squeeze in the U.S. 10-year yields is going to create a nice big correction here. So tough to play this, but I would say that really I would still rather be a buyer of this on any kind of a dip below the SMA on the assumption that basically the lows are going to hold. It's same story in the Aussie. It's still pretty much a buy the dip story, much more than sell the rally story here. And of course, the strongest trade here is the dollar CAD based on the BOC relative strength. That's how the COM dollar shape up. I wish you guys the best luck with this trading. Boris,